Question 1. Regulatory framework. Which of the following statements best describes the role of the Indiana Department of Insurance regarding consumer protection in life insurance? A. The department only issues licenses to agents and does not oversee the actions of insurance companies. B. The department enforces laws to ensure that insurance products meet certain standards and that policyholders are treated fairly. C. The department sets premium rates for all life insurance policies sold in Indiana. D. The department only investigates fraud complaints filed against policyholders. Answer: B. Explanation. The Indiana Department of Insurance plays a crucial role in consumer protection by enforcing laws that ensure insurance products are compliant with state regulations and standards. This includes ensuring that policyholders are treated fairly and have access to necessary information regarding their policies. Option is incorrect because the department does oversee the actions of insurance companies. Option C is incorrect as the department does not set premium rates, this is determined by market competition and actuarial data. Option D is also incorrect. While the department investigates fraud, its responsibilities extend far beyond that to include regulation and oversight of all aspects of insurance practice in Indiana. Question 2. Term life insurance specifics. Which of the following is a characteristic unique to decreasing term life insurance? A. The death benefit remains constant throughout the policy's term. B. The premiums increase over time while the death benefit decreases. C. The death benefit decreases as the insured ages or as the debt is paid off. D. The policyholder has the option to convert the policy to a whole life insurance policy without additional underwriting. Answer: C. Explanation. Decreasing term life insurance is specifically designed so that the death benefit decreases over time, usually aligned with a specific financial obligation such as a mortgage or loan that is being paid down. This characteristic allows policyholders to align their life insurance coverage with diminishing debts. Option A is incorrect because a constant death benefit is characteristic of level term insurance, not decreasing term. Option B is incorrect as decreasing term insurance typically has level premiums. Option D is misleading. While some term policies offer conversion options, not all decreasing term policies do, and conversion options generally do not pertain specifically to the decreasing nature of the coverage. Question 3. Scenario-based question. Mr. Thompson, a 40-year-old father of two, is considering purchasing a term life insurance policy. He has a family history of heart disease and is a smoker. What should Mr. Thompson be aware of regarding the underwriting process for his life insurance policy? A. His premium rates will be based solely on his age and not on his health or lifestyle choices. B. His smoking status and family history may significantly impact his insurability and premium rates. C. He will automatically qualify for a standard rate due to his age, regardless of health factors. D. Underwriting decisions are made exclusively based on a medical examination conducted after the application is submitted. Answer: B. Explanation. In the underwriting process, factors such as health status, lifestyle choices like smoking, and family medical history play a significant role in determining both insurability and premium rates. Since Mr. Thompson is a smoker and has a family history of heart disease, he should expect these factors to lead to higher premiums or potential complications with his application. Option A is incorrect as age is just one factor and premium calculations and health factors are also considered. Option C is incorrect because even at a younger age, health issues can disqualify an applicant or lead to high rates. Option D is misleading. While medical examinations may be part of the underwriting process, initial decisions can be made based on application information, including health history and lifestyle factors. Question 4. Policy components. When evaluating life insurance policies, which of the following riders would provide additional financial support if the insured becomes disabled? A. Accidental death benefit rider. B. Waiver of premium rider. C. Child rider. D. Guaranteed insurability rider. Answer: B. Explanation. The waiver of premium rider allows the policyholder to stop paying premiums without losing coverage if they become disabled. This rider ensures that the insured can maintain their life insurance coverage during financially challenging times due to disability. Option A. The accidental death benefit rider provides an additional benefit in case of death due to an accident but does not address premium payments. Option C. The child rider provides coverage for dependent children but does not relate to the insured's disability. Option D. The guaranteed insurability rider allows the policyholder to purchase additional coverage in the future without proving insurability, but it does not address premium payments during disability. Question 5. Underwriting process. In the context of underwriting, which of the following factors would likely have the least impact on an applicant's insurance premium? A. Family medical history. B. Current medications. C. Lifestyle choices. E. G. Smoking, drinking. D. The applicant's employment sector. E. G. Office worker versus construction worker. Answer A. Explanation. While family medical history can provide insights into potential hereditary health risks, it generally has less direct impact on an individual's premium compared to personal health choices and current lifestyle factors. Underwriters typically focus more on the applicant's current health status, lifestyle like smoking, and occupational hazards, which can more accurately predict risk. Option B is incorrect because current medications can indicate underlying health issues that could raise premiums. Option C is incorrect since lifestyle choices like smoking are significant factors in underwriting. Option D is also incorrect. Certain occupations like construction work can result in higher premiums due to increased risk. Question 6. Claims process. Which of the following statements about the claims process in term life insurance is true? A. The insurer is required to pay the claim within 10 business days of the submission of the claim form. B. A claim can be denied based on information disclosed after the policy has been in force for 2 years. C. The insured must provide medical records for claims related to accidental death. D. The contestability period is a duration during which the policyholder cannot file a claim. Answer B. Explanation. Under the contestability clause, insurers can contest claims based on material misrepresentation or fraud for up to 2 years after the policy is issued. After this period, claims cannot be denied on those grounds, making option B correct. Option is incorrect. While there are prompt payment requirements, the exact time frame may vary based on the specific state regulations and circumstances. Option C is misleading. While medical records may be requested for health-related claims, they are not typically required for accidental death claims unless the circumstances are ambiguous. Option D is incorrect. The contestability period does not prevent the policyholder from filing a claim. It simply allows the insurer to contest it. Question 7. Financial considerations. What is the primary reason that term life insurance is often recommended as a financial planning tool for young families? A. It builds cash value that can be accessed while alive. B. It provides a high death benefit at a relatively low cost. C. It guarantees lifelong coverage without needing to renew. D. It allows for tax-free withdrawals during the insured's lifetime. Answer B. Explanation. Term life insurance is typically recommended for young families because it offers a substantial death benefit for a low premium compared to permanent policies. This affordability allows families to secure financial protection during their most financially vulnerable years. Option A is incorrect. Term life does not build cash value, only permanent policies do. Option C is inaccurate because term life insurance has a defined term and does not guarantee lifelong coverage unless it is renewed. Option D is incorrect because term life insurance does not provide any cash value to withdraw. Tax-free withdrawals are a feature of certain permanent policies. Question 8. Legal considerations. In the context of life insurance, what does insurable interest mean? A. It refers to the financial obligation one has towards another individual. B. It denotes the requirement for a policyholder to have a financial interest in the insured's life at the time the policy is issued. C. It indicates the maximum coverage limit an insurer will provide for any single individual. D. It is the reason why a beneficiary can claim benefits only if they are related to the insured. Answer B. Explanation. Insurable interest is a legal requirement that the policyholder must have a financial stake in the life of the insured at the time the policy is issued. This principle prevents moral hazard and ensures that policies are taken out for legitimate purposes. Option A is misleading as it suggests a broader financial obligation rather than a specific interest in the insured's life. Option C is incorrect because insurable interest does not set maximum coverage limits. Option D is incorrect as beneficiaries can be non-relatives and still claim benefits as long as there is a legitimate insurable interest established at the time of policy issuance. Question 9. Market trends and innovations. Which of the following trends is currently impacting the term life insurance market? A. Increasing interest in cash value accumulation products. B. The rise of digital underwriting and application processes. C. Decreasing demand for insurance among millennials. D. A shift towards shorter-term policies due to economic instability. Answer B. Explanation. The rise of digital underwriting and application processes is a significant trend that enhances efficiency and accessibility in the term life insurance market. This innovation allows consumers to apply for insurance more conveniently and often results in quicker underwriting decisions. Option is incorrect because cash value accumulation is more relevant to permanent life insurance products. Option C is misleading. While millennials may have different purchasing behaviors, overall insurance demand among this group has not universally decreased. Option D may be a factor for some, but the predominant trend is the interest in digital transformation rather than a generalized shift towards shorter policies. Question 10. Practical applications. Mr. Adams is a 35-year-old single professional considering a term life insurance policy. He has no dependents but has significant student loan debt. What should be his primary consideration when determining his coverage amount, i.e. his total net worth, including assets and liabilities? B. The amount of his student loan debt and any future financial obligations. C. The average cost of premiums for similar policies in the market. D. The life insurance coverage that would be acceptable to his parents. Answer. B. Explanation. Mr. Adams should primarily consider the amount of his student loan debt and any future financial obligations when determining his coverage amount. Although he has no dependents, ensuring that his debts are covered is essential to prevent burdening others in the event of his passing. Option is misleading. While net worth is important, focusing on liabilities that need to be covered is more relevant in this context. Option C is not a primary consideration for coverage amounts, it's more about needs rather than market averages. Option D is irrelevant, as the insurance coverage should align with Mr. Adams' financial situation and obligations, not what is acceptable to others. Question 11. Fundamental concepts. Which of the following statements accurately describes the key difference between term life insurance and whole life insurance? A. Term life insurance provides coverage for a specific period, while whole life insurance provides lifelong coverage and accumulates cash value. B. Whole life insurance is significantly cheaper than term life insurance. C. Term life insurance can only be purchased at younger ages, whereas whole life insurance can be purchased at any age. D. Term life insurance does not require underwriting, while whole life insurance does. Answer A. Explanation. The primary distinction between term and whole life insurance is that term life provides coverage for a specified period, e.g. 10, 20, or 30 years, and does not accumulate cash value, while whole life insurance provides lifetime coverage and builds cash value over time. Option B is incorrect. Term life insurance is usually less expensive than whole life insurance due to the lack of cash value. Option C is misleading. A term life can be purchased at various ages, but typically the premium increases with age. Option D is false. Both types generally require underwriting, although term life may sometimes be available without medical exams under certain conditions. Question 12. Claims process. Which of the following must be demonstrated by the beneficiary in order to successfully claim benefits from a term life insurance policy? A. Evidence of insurable interest at the time the policy was issued. B. Proof of the insured's death and any necessary documentation required by the insurer. C. The insured's compliance with all policy terms and conditions. D. A formal request for a change of beneficiary prior to the insured's death. Answer. B. Explanation. To successfully claim benefits from a term life insurance policy, the beneficiary must provide proof of the insured's death and any additional documentation required by the insurer, such as a claim form and possibly a death certificate. Option A is incorrect because insurable interest is only relevant at the time of policy issuance, not at the time of claim. Option C is misleading, and while compliance is important, the primary requirement for the beneficiary is proving death. Option D is incorrect. A change of beneficiary does not need to occur for benefits to be paid if the original beneficiary is valid. Question 13. Regulatory framework. Which of the following is a requirement under Indiana state law for insurance agents selling life insurance products? A. Agents must have a minimum of 2 years of experience in the insurance industry. B. Agents must complete a minimum number of continuing education hours every 2 years. C. Agents are prohibited from discussing policy exclusions with clients. D. Agents must be licensed in multiple states to sell life insurance in Indiana. Answer. B. Explanation. Under Indiana law, insurance agents must complete a certain number of continuing education hours every 2 years to maintain their licenses and stay informed about changes in regulations and industry practices. Option is incorrect. There is no specific requirement for 2 years of experience. Option C is misleading. Agents are required to fully disclose policy exclusions to ensure clients are informed. Option D is incorrect. While agents can be licensed in multiple states, it is not a requirement for selling life insurance in Indiana. Question 14. Underwriting process. What is the primary purpose of the medical underwriting process in life insurance applications? A. To determine the applicant's eligibility for health insurance. B. To evaluate the applicant's health risks and adjust premiums accordingly. C. To identify potential fraud in the application process. D. To ensure that the applicant has adequate coverage for their needs. Answer. B. Explanation. The medical underwriting process aims to evaluate the applicant's health risks and adjust premiums accordingly based on factors such as age, health status, and lifestyle choices. This ensures that the insurer can adequately price the policy based on the level of risk involved. Option is incorrect. Medical underwriting specifically assesses risks related to life insurance, not health insurance. Option C, while relevant, is not the primary focus of medical underwriting. Option D is misleading as underwriting focuses on risk assessment, not on determining adequate coverage needs. Question 15. Financial considerations. Which of the following describes a tax implication associated with term life insurance policies? A. The premiums paid are tax deductible for the policyholder. B. Death benefits paid to beneficiaries are generally tax-free. C. The cash value of term policies accumulates tax-deferred. D. Policy loans from term life insurance must be reported as income. Answer. B. Explanation. Typically, death benefits paid to beneficiaries from a term life insurance policy are tax-free, which is one of the primary advantages of such policies. Option A is incorrect. Premiums for personal life insurance are generally not tax-deductible. Option C is misleading. A term life insurance does not accumulate cash value, a feature of permanent policies. Option D is incorrect. Since term life insurance has no cash value, there are no policy loans that would be subject to income reporting. Question 16. Practical applications. Sarah is evaluating several term life insurance policies. She is considering her financial obligations, including a mortgage and children's education costs. Which method is most effective for determining her life insurance coverage needs? A. The human life value approach. B. The DIME method. C. The needs analysis method. D. The rule of thumb approach. Answer. B. Explanation. The DIME method, debt, income, mortgage, and education, is effective for calculating life insurance coverage needs by assessing specific financial obligations and future expenses, making it particularly relevant for someone in Sarah's situation. Option A is incorrect. The human life value approach estimates future income loss but may not account for specific obligations. Option C, the needs analysis method, is also effective but is generally more complex than the DIME method. Option D is too vague and often oversimplifies coverage needs, making it less reliable. Question 17. Legal considerations. What is the implication of the contestability period of ECA life insurance policy? A. It allows the insurer to deny claims for any reason within the first 2 years of the policy. B. It enables the policyholder to contest any changes made to their policy within the first year. C. It provides a time frame in which the insurer can investigate the validity of claims based on misrepresentation. D. It restricts beneficiaries from contesting the validity of the policy after the insured's death. Answer. C. Explanation. The contestability period, typically lasting 2 years, allows insurers to investigate and potentially deny claims if they find evidence of misrepresentation or fraud in the application. Option is misleading. Insurers can only contest claims based on specific reasons, not for any reason. Option B is incorrect. The contestability period does not allow policyholders to contest changes to their policy. Option D is also incorrect. Beneficiaries may still contest the validity of the policy, but the insurer has the right to investigate claims during the contestability period. Question 18. Market trends and innovations. What recent trend in term life insurance has been driven by advancements in technology? A. An increase in the popularity of whole life insurance products. B. The integration of artificial intelligence in the underwriting process. C. A shift towards more traditional marketing methods for insurance products. D. Decreased regulatory scrutiny of insurance products. Answer. B. Explanation. The integration of artificial intelligence (AI) in the underwriting process has streamlined the evaluation of applications, improved risk assessment accuracy, and reduced processing times. This trend represents a significant technological advancement in the insurance industry. Option A is incorrect. Advancements are not increasing the popularity of whole life insurance. Option C is misleading. A technology has driven innovative marketing strategies rather than a shift towards traditional methods. Option D is incorrect. Regulatory scrutiny often increases with new technologies to protect consumers. Question 19. Term life insurance specifics. Which of the following types of term life insurance allows the policyholder to convert to a permanent policy without evidence of insurability? A. Level term. B. Renewable term. C. Convertible term. D. Decreasing term. Answer. C. Explanation. Convertible term insurance allows the policyholder to convert their term policy to a permanent policy without having to provide evidence of insurability, making it a valuable option for those who may develop health issues. Option A is incorrect. Level term policies maintain the same premium but do not inherently allow conversion. Option B, while allowing renewal, does not necessarily provide conversion options. Option D is misleading. Decreasing term policies reduce in-death benefit over time and do not typically offer conversion features. Question 20. Critical thinking and problem-solving skills. John, a 40-year-old father of 3, is assessing his life insurance needs. He wants to ensure that his children are financially secure in case of his unexpected death. He has no other significant debts. What should John consider as the primary factor in determining his coverage amount? A. His annual income multiplied by 10. B. The future education costs for his children. C. The total amount of his savings and investments. D. The premiums he can afford to pay monthly. Answer. B. Explanation. When assessing life insurance needs, John should primarily consider the future education costs for his children, as these represent a significant financial obligation that needs to be addressed if he were to pass away unexpectedly. Option A, while commonly used, may not reflect his specific obligations. Option C is not as relevant because savings and investments would not adequately cover future expenses like education if John were to die unexpectedly. Option D focuses on affordability but does not prioritize the necessary coverage needed to ensure his children's financial security. Therefore, assessing future education costs is crucial as it represents a direct financial obligation that John wants to ensure is met for his children, making it the most relevant factor in determining the appropriate life insurance coverage amount. Question 21. Term life insurance specifics. Alicia is considering a renewable term life insurance policy. What is a key benefit of choosing this type of policy? A. It guarantees a fixed premium for the life of the policy. B. It allows for conversion to whole life insurance without additional underwriting. C. It provides the option to renew coverage at the end of each term without proving insurability. D. It accumulates cash value over time. Answer. C. Explanation. Renewable term life insurance allows the policyholder to renew the policy at the end of each term without having to provide evidence of insurability. This is beneficial for those who may have developed health issues during the initial term. Option is incorrect because renewable term policies usually have increasing premiums upon renewal. Option B pertains to convertible term policies, while option D is not applicable as term life insurance does not accumulate cash value. Question 22. Policy components. Which of the following riders would provide additional financial protection for a policyholder in the event of an accidental death? A. Waiver of premium rider. B. Accidental death benefit rider. C. Child rider. D. Term rider. Answer. B. Explanation. The accidental death benefit rider pays an additional benefit if the insured dies as a result of an accident. This rider is specifically designed for this purpose. The waiver of premium rider allows for premium payments to be waived under certain conditions, but it does not provide additional death benefits. The child rider provides coverage for the insured's children, while the term rider is not a specific rider, but rather a type of policy. Question 23. Regulatory framework. What is one of the primary responsibilities of the Indiana Department of Insurance regarding life insurance policies? A. To directly sell insurance policies to consumers. B. To enforce compliance with state insurance laws and regulations. C. To create new insurance products for insurers. D. To provide tax advice to insurance agents. Answer. B. Explanation. The Indiana Department of Insurance is responsible for enforcing compliance with state insurance laws and regulations to protect consumers and ensure fair practices, within the insurance industry. It does not sell policies, option A, create products, option C, or provide tax advice, option D. Question 24. Financial considerations. When considering the tax implications of a term life insurance policy, which of the following statements is true? A. Death benefits are subject to income tax for the beneficiaries. B. Cash value growth in a term life insurance policy is tax deferred. C. Premiums paid for term life insurance are tax deductible for the policyholder. D. The death benefit is generally paid out tax-free to the beneficiaries. Answer. D. Explanation. The death benefit from a term life insurance policy is generally paid out tax-free to the beneficiaries, making it the crucial financial planning tool. Option A is incorrect, as death benefits are typically not subject to income tax. Option B does not apply to term policies since they do not accumulate cash value. Option C is also incorrect, as premiums for personal life insurance are not tax deductible. Question 25. Claims process. During the claims process, which document is typically required to initiate a claim for a life insurance benefit? A. A copy of the insurance policy. B. A statement from the beneficiary's bank. C. A signed release form for medical records. D. A police report for accidental deaths. Answer A. Explanation. A copy of the insurance policy is typically required to initiate a claim for a life insurance benefit, as it provides necessary information about the coverage and beneficiaries, while other documents may be needed depending on the circumstances. E.g., a police report for accidental deaths. The insurance policy itself is essential to confirm coverage. Options B and C are not standard requirements for initiating a claim. Question 26. Underwriting process. What factor is NOT typically considered during the underwriting process for a life insurance policy? A. The applicant's health history. B. The applicant's credit score. C. The applicant's occupation. D. The applicant's age. Answer. B. Explanation. Underwriting focuses primarily on factors such as health history, occupation, and age to assess risk. The applicant's credit score is generally not considered in life insurance underwriting, making option B the correct answer. The other factors play significant roles in determining eligibility and premiums. Question 27. Legal considerations. Which of the following best describes the concept of insurable interest in life insurance? A. The policyholder must have a financial interest in the life of the insured. B. The insurer must have a direct relationship with the policyholder. C. The beneficiaries must be family members of the insured. D. The policyholder must be financially dependent on the insured for income. Answer A. Explanation. Insurable interest requires that the policyholder have a financial interest in the life of the insured, which is crucial to prevent moral hazard and insurance fraud. Option B is incorrect, as the insurer does not need a direct relationship with the policyholder. Option C is too restrictive, as beneficiaries do not have to be family members. Option D, while relevant in some contexts, is not a requirement for insurable interest. Question 20. Practical applications. As an insurance agent, you are tasked with helping a young couple decide on the appropriate amount of term life insurance. Which method would be most effective for determining their coverage needs? A. Assessing their current income and applying a multiple of it. B. Calculating future expenses based on their life goals and family needs. C. Estimating the total value of their assets. D. Suggesting a standard policy amount based on industry averages. Answer. B. Explanation. Calculating future expenses based on life goals and family needs. Option B is the most effective method for determining the appropriate amount of term life insurance. This approach considers specific obligations and long-term goals rather than relying on general guidelines or averages. Option A may overlook unique needs, while option C is not directly relevant to life insurance needs. Option D does not account for individual circumstances. Question 29. Critical thinking and problem-solving skills. Michael, a 35-year-old single individual, is contemplating purchasing a term life insurance policy. His main concern is ensuring that his aging parents are financially protected in case of his unexpected death. What key factors should he focus on when deciding the coverage amount? A. His current salary multiplied by 12. B. The total amount of debt he currently owes. C. The projected cost of long-term care for his parents. D. His potential future earnings over the next 20 years. Answer. C. Explanation. Michael should focus on the projected cost of long-term care for his parents, option C, because this represents a critical financial need that would need to be met if he were to pass away unexpectedly, while his current salary, option A, or debt, option B, may be relevant. They do not directly address the specific obligation of caring for his aging parents. Option D, estimating future earnings, is also less relevant than ensuring his parents have the necessary care. Question 30. Term life insurance specifics. Which of the following statements about decreasing term life insurance is true? A. The death benefit remains constant throughout the policy term. B. The premiums generally decrease over time. C. The death benefit decreases at a predetermined rate over time. D. It is the most expensive type of term insurance available. Answer. C. Explanation. In a decreasing term life insurance policy, the death benefit decreases at a predetermined rate over time, which is useful for covering specific financial obligations like a mortgage. Option A is incorrect because the benefit does not remain constant. Option B is also incorrect. Premiums usually remain level. Option D is false, as decreasing term insurance is typically more affordable than level term insurance because of the declining risk over time.